Morning, everybody.
Good morning.
Good morning. Good
Well,
morning.
you guys doing okay today? I see Matt's hair's combed. Dan's probably combed. It's always combed that I've ever seen it. Mine's
I don't know if
struggling a
it's
little bit.
I,
struggling. Yeah,
I mean, my secret is I'm losing my hair, so I don't really have to comb it, and that's also why I can wear a hat even when it's pretty warm out because I get cold. It just you gotta take lemons and you gotta
that's
make
right.
lemon cider out of it. I think.
They used to call me when I was a kid alfalfa because my hair right there would stick up. But the difference was I had hair right here too, and so now I just have the alfalfa little rascals.
That's right.
The
And we
starting point.
we both
Troy.
got the LeBron James thing going on right
Yeah.
here.
Hey, Troy. Anything associated with alfalfa is good. I love
I know. I love
Little
little
Rascals
rascals.
was great.
Hey, speaking of little rascals,
Yeah.
Every morning at 8:45 Eastern, option Omega's got your back. Troy's dreaming big like LeBron, mass back testing like a daddy Mac. Dan's 30 years got our way, trading life and markets every day. Option on Lega, you're traded home, where every move makes you feel less alone.
I love it. I got to get better at that last fade cutting to it, but besides that, it's perfect in every way. All
Troy,
right,
I
guys.
ordered my rope. I ordered my rope today. Like
Oh man.
those two
Oh
guys.
yeah.
Matt and I are gonna next time I see, we're gonna do the rope together. And
I love it. I love it. I'm gonna hopefully. I just my role. I want to be the guy in the other video that just slowly looks up and money starts pouring
oh
off.
yeah, I
That's
missed
my
those
favorite
days.
guy.
Yeah, that would be
Yeah,
nice.
I miss those days. uh, well, I told the guys I was in Myrtle Beach yesterday, back in Knoxville this morning. Uh, Family sometimes makes the call. The family had worn down. We weren't going to get any more joy out of the beach, no matter how hard we tried. So we made the decision to drive back immediately. Um, with that being said, it made me think. So that was about 900 miles in a 16-hour period for me of driving because
Wolf.
I went Tuesday night, got there Tuesday night and left Wednesday morning. Um, so with that being said, I'm interested. You guys, longest drive in a 24-hour period.
Ooh, I think I know mine, but Dan, you can go first.
Yeah, I think there's definitely one. It's going through. We had all the kids in the back. This is when we didn't need seatbelts, so we had this old uh, what's the minivan? Eddie Bauer or Eddie Bauer, one of those box uh,
Yes,
minivans. The kids are in the
yes.
back. They're all asleep, blankets, and we're going through middle of Indiana, like on that 65 or whatever, and everything. It's dark. There's no cars out there, and it was freezing, and the car just died. We're not even near a gas station or whatever. So we're like, what are we going to do? I think this was before cell phones, before, there were still horses, barely a few cars. I'm joking. And then I'm thinking, what are we going to do? And all of a sudden, this guy in a pickup truck pulls up in front of us, starts walking at us. And I could see him. It looked like, okay, I'm going down. This is it. And he smelled like a skunk, right? Like he was out hunting or something. And before he came, I was nervous. Hey, how you doing? Like that. You go, yeah, I was out hunting. And it couldn't be the nicest. I mean, car full of kids, and they're all sleeping. He took care of us, took us to the place, drove me, and I witnessed. Couldn't have been a kinder person. That's where you say judging a book by its cover or whatever. It was. It turned a horrible night into a wonderful night with that. So, but that was a long ride. Anytime, I love Indianapolis, Matt, especially because Matt's there. But going down 65, that's got to be one of the worst it's not scenic. It's not like going to
Oh,
Louisville
it's rough.
or going through the mountains. It's a tough one. And anyways, I don't know what that has to do with any, but that was the longest drive. I remember trying to get out of Route 65, or is that it? 65.
Yeah,
Is that it?
65 goes from as the comment section knows, 65 goes from Chicago and gets you on the path down to Florida. So yeah,
That's a long road. That's a long
Yeah.
stinking road. Yeah.
Yeah.
Anyway,
Indiana is cheap to live in, and it's a great place to live and to raise a family. We do not have mountains, and we do not have oceans, so that is the trade-off. And we have the worst of all weather. So my longest drive, it had to be during time that is like a fever dream now, spring 2020. During COVID, when nobody knew if the world was ending and the stock market was hitting limits and the NBA was canceling their season. And we made probably what normally takes like a 16-hour drive in about 13 hours straight through from Indiana down to Florida. And it made you realize how crazy the world was during COVID, because what was insane was the difference in traffic. It was night and day. And just hours melted off that trip. And, you could drive and look both directions and see like a truck or two going each direction. That was it. Just a wild time. So yes, indeed. But it goes to show you, when you look at that map of the US, people from not the US, you can drive in the US 15 hours and you're down one of the seaboards, or you're from one region to another. And in other parts of the world, you drive 15 hours, you've crossed 4 countries. So it's a different experience here.
Yeah. When you think real quick, like of the Premier League in England, those guys, you think of like, okay, LeBron in LA are playing the Bulls. That's a good 3-4 hour plane ride. I mean, you're in England. Those guys you don't have 3-4 hour plane rides in England. They're all in. Anyway.
Yeah. In a lot of ways, traveling between states in the US is like traveling in between countries in Europe. So
mine, when I was a little boy, 18 years old, I worked for a guy at my church who did school fundraising. And so I sold cookie dough to schools. Is my job when I was 18. And I would do the sales call. I was the guy that said, hey, if you sell 15 buckets of cookie dough, and I'd pull money out of my coat to show the kids, like, hey, if he sells 20 buckets of cookie dough. I did a call. I had a thing one time where I had to be in Knoxville all day. The call, the presentation was like at 7:30 the next morning at Virginia Beach. Drove all night to Virginia Beach, did the call, had to be at another call back in Knoxville. So that was 1,100 miles in about 20 hours.
Ooh, crazy.
It was painful. So anyway, enough about that. Let's talk about something just as painful for some people. The Fed.
Oof.
What'd you guys think yesterday?
Well, our old friend Transitory made another appearance. The infamous Janet Yellen, Jay Powell, Transitory from circa, we were just talking about COVID 2020, 2021 era, when inflation was going to be transitory, when it seemed like anybody who was doing the grocery shopping for their family in the US could tell you it wasn't transitory. I heard the word mentioned again yesterday. So kind of interesting that a lot of the same folks who kind of have been steering the ship through this whole event of the last 5 years and this inflation are still kind of steering the ship. There's been some changes on the administration side, but yeah, the Fed, the same. The price action was super interesting. And again, I think we bottomed around 56, maybe 20 or 30, and then topped out almost 100 points, 90 points later. So again, a spicy day to trade during the Fed announcements. And actually a lot of people, I think, really enjoyed trading that volatility, both going long and short. We'll do some OO shows on a couple different approaches that you can take during different times of the day, because there are certainly some patterns that are observable that you can set up backtests and trades around. But a pretty interesting day. Dan, what did you think of what old Chairman Powell had to say?
Well, I think, was it Troy or Matt that you said, or no, Troy, you said when you were driving the car and watching the press conference, which right there is a good visual.
If there's any police officers, I was not doing.
He was not doing this.
I wasn't doing that.
In a hypothetical situation.
Yeah, that hypothetical.
Theoretically.
But when you theoretically were doing that, we were up 97 points, which was near the highs, and then all of a sudden, like in concert, we went down, and from a technical, not that it seemed like they were getting within spitting distance of 200-day moving average, some of those other moving averages, and then but I was watching if you look at the 8-day moving average exponential, we've that's kind of been the magnet most of the week, and now we were above it yesterday, now we're under it, and now to throw fuel on the fire right now, the futures are down 24, and you have President Trump is saying, which I love, he thinks he's telling, which Powell to me he's kind of that John Wayne personality, like, this is what I'm going to do. I'm going to stick. No one's going to mess. No one's going to kind of influence me. And Trump is saying, lower the rates, right? He thinks today, I don't know if that came out today or last night or whatever, but he's saying he thinks he should lower the rates. And I think Powell, to me, if Powell just stays, at least what you're getting with him, right? If he goes the John Wayne role, stay with the John Wayne role. I'm going to do this. Don't cave into, if for whatever the president is saying. But again, I think the theme, like you said, is these 100-point ranges. They're continuing. This to me is unprecedented. This is like 14-foot waves in Myrtle Beach. We're at a fourth week. Good grief. And so I think it's I think the toughest thing for a retail trader is just adjusting to, hey, this isn't my normal environment, which I like for my particular trade in a 16 VIX in the market going up. It's different. And instead of complaining, okay, what works now? What are some of the things that work in a high volatility environment? And who would know that VIX 19 or 20 could be the low here for a while, right? And, we've had a range of 29 to almost 19 in about a week. And so obviously continuing. So, expect more of it today. And you have when is unemployment? Isn't that
is it this morning? I think it's 8:30 this morning.
Yeah.
I could be wrong.
Yeah, no, there's definitely some, I forget what it was today, but in the
jobless claims today, I think.
Jobless claims today, the continuing. Yeah. So.
Yeah. This is the thing. I agree. I think watching it yesterday, it was funny. I was listening to Bloomberg. Shout out Sirius Radio. If they want to sponsor us, I'd love to have Sirius as a sponsor. But they were confused because the market was going up when to them it was clearly hawkish what he was saying.
Right.
And there was a point, and I did watch when it was up 97. Someone asked him basically, like during the press conference, the Q&A, like, hey, so we're still good for the 2 cuts this year, right? And he more or less said, why are you guys worrying about that? 2 cuts, 4 cuts. He didn't say that, but something like that, 0 cuts, negative 2 cuts, going up. I don't know. Who cares? We're staying path dependent. And the market dropped like 15. They didn't want to hear that. I'll say this, to your point, Dan. If we don't like inflation, you really, really don't want the Fed to lower interest rates right now. And that's the pickle they're in.
Yeah. That's right.
I understand why President Trump wants that. If I were a president who cared about the stock market a lot, I would love that. For the long-term health of the economy, you don't want to lower interest rates right now.
Right.
So, and anywho, what we can do, though, is we can't control whether they're going to lower interest rates or not. Maybe if we all lose enough money, we can.
Yeah,
But together,
that's right.
Unironically, I think I mentioned this before, but there's an argument that is part of the thesis that when the SPX is at 6,000 or 6,200 or whatever, and assets are inflated, then it is harder to fight inflation, and compressing the value of assets will naturally compress interest rates. Again, not my theory. I'm just saying that's one of the positions. So that, you can certainly make that argument. But Troy, do you want to look at some back tests? I've got a back test here we can check out.
let's do it.
Okay,
Can you see this?
Yes. Okay, so what we have here, I think this is the back test you guys did yesterday, right? So we have a 923 double calendar. So just real quick, high level review. This is in QQQ, so ETF on NASDAQ, and it's 20 deltas. It's using a floating entry time every day, but only on days where there's exactly 923 expirations available, which are 2 weeks apart. So the backtest will only put a trade on if during 932 and 359, so essentially sometime during the day, you have a pretty good size move up. So this is the backtest from yesterday, and there's different ways to size backtests. We will do lots of content on that and lots of commentary on that. For the purposes of this, because we're doing it every single day, we're just going to look at one contract per trade, which has pluses and minuses, the different ways you can set it up. The pluses of this is it will give you kind of a clean win percentage and capture rate that's pretty consistent. So the first thing is just to look at this one. The other thing I'll note, we've got some opening fees here. We don't have closing fees. We could switch these into opening and closing fees, but $1 in total fees is probably pretty close to what a lot of folks are going to pay to enter an exit trade like this. If you're not using one of kind of the lower cost brokers, which those might be cheaper. So the other thing, we've got a penny of entry and 3 cents exit. Now, I will note this. If you're used to seeing optional mega backtests, which I know a lot of you guys are, most backtests that get shared in the Discord community around the world, it seems like on this show, are using SPX. So the size of QQQ is notably different than SPX. It's, you could say roughly a tenth. It's actually smaller than that, but roughly a tenth. So when you're looking at a penny of entry slippage or 3 cents of exit slippage on the Qs, that is going to be a lot more on SPX. So that's a little chunk of slippage. As far as the Punisher goes, because there's an exit, there's no other Punisher here. And so what we're going to do is look at a couple different back tests. The first one, I think, let's look at this one. So what we're doing here is, and I'll put this in a log. We'll keep it linear here. What we're doing here is we're not timed exiting, but we're using a rail exit. And so the rail exit here is a 5-point move past the call and put strike. So if we go into the trade log, we can see that. Unsurprisingly, the last several times it's run, it has had those rail exits. Actually, it looks like 3 out of the 4 have been winners, but more importantly, you're opening at 491 and then closing, in this case, about a week later, 5 days later, 6 days later, 7 or 8 days later. Here, you're closing when the put gets violated. So you can see that the put strike of 472, you were 5 points past that. So this is a rail. Now, what are some pluses and minuses of putting rails on a DC, and what are the distances that one might consider when backtesting different rail lengths? Dan, do you want to maybe talk a little bit about kind of the exit when tested idea of moving too far outside of the profit tent for a second?
Yeah.
Okay.
Or when test, you have 2 things, right? I mean, in a double calendar, we'll call it, I think there's 2 unique problems or challenges. Let's use that. Number one, the mother-in-law syndrome, the vehicle, in this case Qs, hitting the short strike early in the trade, like within 24 hours, right? You're like, hey, we like, just like the mother, you like your mother, you like to have in a DC at the short strike, but not with a ton of time left, not with 7 days. It's just way too early to be at that short strike. So that would concern me as a risk manager that, whoa, in that case, I mean, if you asked me what I might consider, in that case, if we hit the short strike right away, I might abandon, depending on, I know this is, you want to stick with your back testing, and I really believe that, but you might pull your early in the trade, I might abandon ship. I mean, sometimes if it's that quick, or I might take off the opposite side and say, this is going to be in for a little bit of a battle. And then the other key element with DCs are, what if we go beyond the short strike? Well, it all depends, right? If you go beyond the short strike early in the trade, that could be problematic, and you can start hitting some serious P&L problems. But again, then you say price could come back. But if the longer you can be in the trade, you can handle more in the money, right? But obviously, when I think of handling when a DC goes in the money, the most beautiful time has been now, right, Matt and Troy, Matt's had some DCs on. Some of these go way in the money, but because the volatilities are high.
That's right.
Matt, you were telling me some stories about you've been able to handle 100 points or whatever.
Yeah, when VIX is high, I mean, when VIX was peaking in the high 20s, I had one that was 80 or 90 points in the money and was up like 60%, which is crazy because it was so deep in the money, but it was also very close to expiry, and it had been on for several days. So when the longs are expanding in vol, that's ideal for DCs to have the longs expanding in vol, because as time moves on, the shorts are always losing time value as time moves on. So if you can time it, if the timing works out where the longs are expanding in value because of vol expansion, that's kind of the sweet spot. To your point, Dan, about, I have one of these trades pulled up here from, we're going to look at it when it happened early in the back test. If you can look at this, I think now somebody in our very smart chat, shout out to the chat, can probably correct me on this, but I believe this Friday was either the Friday that the DeepSeek overnight gap happened, or the week after that, where we also had a huge move overnight. And you can look at this and see what happened is, on Friday, we had a move up pretty early in the day. The back test put the trade on 7.25, and Monday morning, the put was already tested. So this is kind of like, this is one of those situations where you don't want a back test to see. Well, you want to see it in a back test and not a real trade, right? So if you look at the trade replay here, you can see what happened is Friday was fine. We had this gap down Monday, and it just got absolutely wrecked, and then came off Monday morning. And so that was an event where none of the, very little of the time had burned off of the short. There was a huge move very early in the trade, and vol expanded. So the shorts expanded in value. And one of the other things that you mentioned, Dan, it's interesting with these, because a lot of times what happens in these DCs, if you break them up into a put calendar and a call calendar, which is what they are, the put calendar side is fine. Like, even if it goes very deep in the money, the put calendar side is usually okay. The problem is your calls get just absolutely wrecked, or your opposite side would get absolutely wrecked. Yeah. So the cool thing about back testing is we actually are going to show some back tests where DCs are back tested with the puts and the calls as separate leg groups, which is trivial to do in option omega. So this is an example right here of the put tested. Now let's go back up to this, and we're going to look at something else. So this is the put testing at 5 past, right? The negative is the past. So it tested at 5 past. And I have one here that we can just kind of look back and forth to where it goes at 1 past. So if we look at the drawdown, 1.2%, again, this is capped. So we have to remember that in context of all the discussion, starting capital, ending capital are not as valuable when this is capped. What we're going to look at is win percentage, capture rate, drawdown, right? And again, drawdown is going to be capped as well, but this will show you the capture, the win percentage is roughly the same. The capture rate goes down when you give it more room to run. As expected, it's got a higher drawdown, and the backtest here, you only are letting it run a point past. So if we jump down here, we can see that same day, the other backtest got out like at 10 something on that same backtest. This one also got out. It got out at 9:32, right when the market opened. So if we want to look at like just that one, here, the difference 10-12. And if we go back up to this one, 10-12 versus, versus 9:32. So sorry, I'm getting excited about this. I get excited. The idea with this -1 is you're getting smaller rails. So you're going to let it go less past the expiry. So it's a narrow rail. So Dan, do you want to talk about kind of maybe what a narrower rail means versus a little bit wider rail?
Yeah, narrower would be like you mentioned, you're going to deal with the move a little closer to the cuff, a little closer past the short strike, which, you definitely need to give it more room. How much room is really the art, right? Or the back test, I would say, to see how much do you give. Now, Qs is a much different product than SPX. Do you go 5 points?
That's right.
In SPX versus Matt's talking about I had 100 points outside the short strikes and we were in good shape. Right. So I think that's where the back testing comes in well, that you can kind of fine tune the car. But if I could comment real quick, Matt made a comment here that about on put calendar, when you have a DC, he made a comment that the put calendars really, they kind of run the show, that they do well. And that just brought the thought to me that a lot in the last month, as we've had the down market, is the vols. You got to be careful with the vols. We've been going up, but we've run for maybe the last 2 months when we put calendars on. I'll put calendars on 30, 40 points below the market in SPX, and you could still be delta neutral. I mean, so you're not, even when the market going up, your deltas are flat, but you're basically, by running a calendar, and that's how we've been doing the setup underneath the market, you extend your break evens on the downside quite a bit, right? But if we go up, you're fine because your deltas are neutral. And it just, when you look at a double calendar or whatever, but that put calendar, especially in a high volatility, the amount of the room that you have is staggering. And I think that's where, like when you said you have 100 points in the money, it's because when you look at the break evens in SPX calendar, when VIX is 20 or over, it's like routes, when you said 65, how far 65? It's like you can be on 65 for 2 days. And I think, which makes beg the question, I think that's an interesting thing when Matt is talking about, they'll backtest the call calendar different from the puts, because you just wonder, the put sometimes might not need the call calendar in certain instances, which brings up a whole different discussion.
About
to that
single
point,
calendars.
To that point, the reason I think for that, this particular trade, these type of trades, is 923, I'm selling the 9 and 23 day. You have so much Vega. I mean, you have a lot of Vega risk in this trade, right? Flip side, because when Vega's high, when vol's high, you obviously are benefiting from it, and so your break evens are going to be huge. Your break evens might not be as huge if you had like a 1 day separation in your time spread, right? And
That's
so
right.
this is a lot of Vega in this trade, and that's one thing you'd want to test around in the back testing is try different durations.
Yeah,
Durations
and
themselves could.
And volatility, how about volatility rails on the upside? But you have something here, right? Because you're saying you only do it on the days that the market is up. So the vol should be a little bit lower, right?
Yeah, that's the idea on the entry. And speaking of the days, shout out to the chat. Joseph is right. He made a comment that the exact DTE is not on this test, which means the 923 might not exactly be a 923, but it's going to be close. So as you can see here, the days sometimes are exactly 14 days apart. Sometimes they're a couple days more than that. So this is the same concept. And that point about having enough space on these longer DCs, there's probably less of a difference between like a 923 and a 924 than there is between like a 3.4 and a 3.5,
right,
or
right.
a 1.3 and a 1.4, which have huge differences.
Yeah, the only time I would consider a 923, at least unless the back test gives me some different information, but much more volatility sensitive. I would want VIX at a lower rate because you're picking up as you take that long further out from the short, your Vega is going to go up. And so a little more sensitive, but again, it is that contrariness conversation when you say, yes, I normally want to do calendars or double calendars when the vol is low, but if the vol goes up and kind of can stay up a while, that's your best time. So it is like talking out of two sides of the mouth, but it's just your fear. In most of the last 10 years with an upward trending market, you get torched on some of these things if the vol goes from 17 to 13. But over the last month, it's been beautiful because have you looked, man, at some of these double calendars, the expected move might be 130 points for 3-4 days. Your break evens are like 180. You're just getting.
Yeah. The trick is, as we saw last week, is the break evens, and this is the trick modeling DCs versus backtesting DCs. They both have value, but when you model DCs, there's folks who are inexperienced trading them, they model the DCs and say, this modeling software is telling me there's 0% chance of profit on this. Well, that's because the vol is driving the bus a lot of times. So like last week, when VIX contracted to almost 30 to almost 20, the DC longs did not love that. So people had short long rails or whatever to get out of DCs because the longs will get crushed. I want one quick thing. I think we got to wrap up, but one quick thing from risk management perspective before we hop off here is the Qs are assignable, right? So people who are looking at this back test, keep that in mind. Qs are assignable. SPX is cash settled. So when we were talking earlier about me having a DC that was 100 points in the money, the automation platform, the optional mega platform, actually closed it for me when it got very in the money, because when you have a DC that's cash settled, even though it's not assignable, you don't always get a good fill deep in the money. And we'll spend some time talking about this. Now, in that case, vols were very high. My longs were fine from it. In a low vol market, having a DC that is 100 points in the money is probably a giant sad face. So that's a topic for another day.
Yeah, and we'll talk about it, because don't ever let your DCs get that far in the money, because you'll ruin it for the rest of us.
Right, the brokers don't love it.
Your brokerage
that's
are going to make
that's
you're gonna try to open up a $3 double calendar one day, and it's going to be like a $400,000 margin, because the brokers are like, well, I hate you guys. I hate all of you.
Yeah.
So anyway, thanks for talking. Thanks for hanging with us. We'll be back tomorrow. As Mr. Rogers always said, we'll have things we want to talk about. I will too. So love Mr. Rogers. Shout out to him. And
Shout out.
we'll be back tomorrow to maybe improve this test one more time, and then we'll move on to some other stuff.